Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your weekend metals update for this Friday, the 24th of March, 2017. We're about 2 p.m. Central Daylight Time before the vote that is going to take place on the floor of the House of Representatives. Now, I'm doing this now because I have no idea what time that vote is actually going to happen, what's going to happen, and I want to get these done. What we're looking at going into the market now is a slight rally in the metals in terms of the silver and the gold. Copper down. They did settle the Escondida mine strike, and Saturday morning the workers show up again from Union 1, which is the largest union there, and they go back to work. So that deal's done for 18 months. That's how long it's going to last. Then we'll find out what goes on next. The other parts of the market that are the other mines, Grasberg in Indonesia, I think it's Cerro Verde in Peru, they're still on strike. So don't worry about too much about them. Let's take a look at a gold monthly chart. You've had a pattern of lower highs, lower lows, and suddenly you're having right now a week that if we look at this week's low, 1194.50, which is right here, the week before 1197.90. So we have an inside week. This chart actually would get bullish if the market clears last week's high of 1263. So that's important because that would be the first time this chart gets bullish since way back, actually. I can go further than this. That would be a real swing line bull move, and you didn't even have that back here. It took up here to get it. So that's very different, not into an upper Bollinger Band, and that could call for as high as a 1308 level in this market. When we take a look at the weekly chart, now that's what we're on now, you've gone from 1263.10 to 1194.50, and since then you've bounced rather smartly back to the 1250 level. When we add on this the chart of just weekly closes, not looking at anything else, you can see about where you're at on this market. You have not been able to close over that, but you're in an upthrust. You've got the pattern of higher highs, higher lows, hasn't changed. So that part's bullish. When we go to a weekly chart with the swing line study, you've got a pattern here of a higher high, then you broke down, made a lower low. You can't get a bullish pattern out of this, even this coming week. You can just saw it wouldn't happen. You'd still have the lower low and a higher high no matter what you do. You can get a bearish pattern if prices were to take out 1194.50 because you'd have lower highs and lower lows. So that's important to understand in and of itself. Very important is that the market successfully tested the 100-week in green and then the 18-week moving average of closes, and it bounced away. That certainly gave the bulls something to talk about. And you don't run into key resistance until you get up to, see these black lines? They're called Bollinger Bands. Until you get to the upper Bollinger Band, which is just got a value of 1271 plus. Why? Bollinger Bands are meant to keep the markets trading within them 95% of the time. You could set the formula to 100 and then put it on the chart. It's never going to hit the band. The band also is meant to be hit in a times broken, just the way you've done it here when you got over it, the way you got here. That gives you a chance to come out. Why? Because if you understand the concept, if the band doesn't break down with the market, the odds are that you're going back into it. You might get more of a reversal than you counted on. So I'm looking at this market as still having the goal of 1271 in mind. I'm looking at an overbought market, but I don't use slow stochastics on the weekly charts the way that I do on the dailies. So I look at it, and yeah, it's rich in price, but it can stay that way for a very long period of time. All I care about is the bias is up on the chart. When I go to the gold ETF weekly, you've got the same type of pattern. Higher high, but a lower low, overbought, Challenged both the 100-week and the 18-week average, held it, and the next stopping zone if the market rallies is 121.21, the upper Bollinger Band. When we come to the gold miners, you have the higher high. You've got the lower low. It's not an easy chart here. You got nothing, if you will. Yes, it's over the 18-week average of closes, so you have upside bias, momentum pretty flat right here. In the silver market, you have a bullish chart, so that's a little bit different. Now, the big question you ask yourself over the weekend, is silver ready to gain on gold? And that'll be something that you should be looking at. But you have the pattern of higher lows, higher highs. The market came down to, held the 18-week average of closes, and has moved up until it takes out 1682. This chart is still looking bullish, not even overbought. Could be headed back to the 1845 level, about 90 cents higher from here. In the copper market, you had the settlement of the strike, and what is the pattern on the chart? You have a pattern of lower highs, lower lows. We don't know what this is all going to do just yet. Momentum pointing down, and a settlement under the 18-week average of closes. Therefore, this particular chart is fully in the bear camp, bias, trend, momentum, until it takes out 268.30. Other than that, if the market wanted a break, you might be headed back into this 250 area, the lower Bollinger Band. In the palladium market, you have a pattern of a higher high and a lower low. So you know right away you don't have a trend on the swing line. Prices did manage last week and this week to close both times over the 18-week moving average of closes, leaving the next resistance point if the market gets a rally to back up here to the 990.40 area. Should prices take out in this right here, 932.90, I would look at an all-out assault to the downside, looking for the 881.80 level. So on this chart, what's important is you cannot, because of the pattern, get the swing line to turn bullish this week. It can turn bearish. So it's two markets that we're saying that about now. In the palladium market, what the market did is it had fallen back 2 weeks ago into the 18-week moving average of closes, held it, and come up. There's been a lot of stories also about traders abandoning platinum and running to the palladium market, both in the ETFs, the futures, and so on. And as you can see, this market is online to get an embedded reading. Should it get that, I can make an argument of even higher prices coming on this chart. In the dollar index, we fell this week right down to the lower Bollinger Band. And the question you have to ask yourself is, what's in store for the dollar if the Affordable Care Act vote fails? And that becomes a big question. Is that bearish on the dollar because it implies other things won't work either? I can tell you very quickly, from everything I'm reading and the stories and the sources that I have, that Mr. Trump isn't sitting there ready to cry about affordable care. He did his best. He'll move on. He'll go to taxes next. Taxes will wake these markets up. Affordable Care Act is social programs. Taxes are pocketbook programs. I'm just calling it the way it is, and that's how the market's going to look at it. And he'll do this to it. I did my best. Let's move on to the next part, and we'll see what happens there. But the market will like hearing about taxes. Well, what does that mean? Is that bullish or bearish for all this? That's the question. Right now, the bias is down. You're in an oversold condition. If this gives ground, the lower Bollinger Band, you could go down another full penny to 97.32, which is the 100-week moving average of closes. So I put it all together, try to come up with stuff for you, and I think I can do you better than I even think. 4-week free trial. It's an online trial to Consensus. Now imagine you go to one source and you have, I don't know, 50, 100 newsletters, maybe more than that. And all you do is you're going to get a user ID and a password, and you're able to read these all. Here's the cool part. Golds are all together, metals are all together, and silver, copper, whatever it is. But then they take the letters, be it bearish writings or bullish, and they create a consensus. And these are some of the people that are contributing, quite a bit, as you can see to it. And from there, you get an idea in Tuesday afternoon what percentage of the letters are bullish and bearish. I find that helpful to just get an idea of where people are. Give us a call. You can go to our website. You'll see a carousel of free offers. You can click right up here, by the way. If you're watching me on YouTube, the form will appear just there. On some websites, they'll have a link underneath this video, and it'll say click here on that. Open that up, and the form will appear there. I'm Ira Epstein. You have a great day, and I'll see you all come Monday.